Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Happy Saturday to everybody. We got a great article from Redfin we're going to go over. There's this chart that's the best chart that we've seen in a long time. So stick around for that. Make sure you subscribe to our channel to help us out and share our videos. Okay, Juana, home prices rise for the first time in nearly 5 months. Now, that's the headline. Now, but what does that mean? Because we've actually, not only nationally, but in Las Vegas, every month since January, home prices have gone up. So when they say they rise for the first time in 5 months, what are they saying?
They're saying that the crash bros melted like the witch in the Wizard of Oz when it rained.
Okay, why did the doomers and the crash bros melt when this article came out?
Because now they're struggling to spin this in some other way that, the sky is falling. Look,
Okay.
I mean, we've said this before. This is just basic economics, supply and demand. Inventory is down, so prices are up. This
Okay.
is really basic.
What prices they've been up since January.
Right.
This article's saying they rise for the first time in 5 months, but they've been up every month for the last 6 months.
Right. So what they're talking about is as far as year over year, right? This is their happy thing.
Okay.
Where
We're not talking month about month.
No,
We're
no.
talking year over year.
Yeah.
This is the thing that everyone's been talking about, right?
Yeah, right.
Year over year home prices.
Yes.
And they're up year over year. So everyone who came on the channel the last 5 months and got all excited about year over year, that's done. That's the history.
Right.
We're now up year over year. Home
Right.
prices are year over year higher than they were.
Exactly. So cheers to everyone. The sky didn't fall. Everybody's pretty much okay. And even markets like Las Vegas that struggled over the last year, even while they were struggling, they weren't down substantially. And now that we can see that year over year, everybody is basically up. This gives markets like Las Vegas a little bit of breathing room with the reduced inflation to recover even more and keep going up. Now, I'm not saying real estate is going to go up forever. I'm not suggesting that, but I am saying that the recovery is pretty much here.
Okay, so let's go through some of the article notes from the article. We'll do the chart because the chart, I think, is the telltale. It literally tells the story. Here's the first quote. The median U.S. home sales price rose 1.5% from a year earlier. So remember 2022 when home prices peaked at the peak, and now we're 1.5% above a year from July. And this is from July 9th. The first increase in 5 months, year over year increase in 5 months. Average weekly mortgage rates are their highest since November 2022. But so what's driving prices because everyone's saying no mortgage rates. If mortgage rates go up, home prices have to go down, but that's really not the case.
No, absolutely not. So mortgage rates and home prices do not have this seesaw effect, right? That's not the case. What's driving prices is two things. One, inventory, right? So if you don't have enough inventory and you have more buyers than you have sellers, you're going to have a lot of price support. And two, the fact that that inflation is down is really helping. And so it's giving people two things. One, a little bit more financial security that prices are not going to keep going up for goods and services. And two, it's giving them more income to allocate to housing versus other things.
Okay, so I'm going to read this quote. On the bright side, this week's economic news provided a glimmer of hope for the housing market. The latest consumer price index report showed that inflation cooled more than expected in June, largely because it started reflecting months of cooling housing costs. So a year ago today, we had 8% in annual inflation. That was the rate of inflation. Now, a lot of that was housing, home prices, rents, things like that. The latest Fed report was 3%. 3% is the lowest we've seen in a few years. Actually, inflation right now is less than it was in 2019.
Right.
It was like 3.4%. It's been trending down every month for about 8 months now, and it looks like we're going to once we get back to below 2%, mortgage rates are going to follow. Mortgage rates are going to start dropping.
I think mortgage rates are going to probably start dropping even before that because, remember, mortgage rates are anticipatory. They do not necessarily reflect current situation. They reflect what the market anticipates.
Okay, so we got one more quote, then we're going to show you this chart, which tells the story. Median home sale price was $383,750, up 1.5% from a year earlier. That's the first year-over-year increase since February. and just $2,500 shy of the record hit in June of 2020. There is zero chance, Juana, that if you had, okay, so let's first start with this. All the people who panic sold, on average, median across the US, their home is worth $2,500 less than it was in June 2022. But all those people who sold because they thought home prices would fall 40 or 50% because some idiot on YouTube told them that, they're pretty much screwed because now their home is appreciating again. It's basically worth what it was worth a year ago. They paid probably 6 to 8% in costs to sell it, realtors' fees, all these other costs. They lost the mortgage interest deduction. They lost their equity that they were building every month through their payment. And now there's no way they can buy probably because the interest rates are up.
Well, even all those things aside, they probably can't buy because there's nothing to buy.
And we did an analysis video about a year ago. First of all, we talked about this a year ago. It would cost home prices would have had to drop 38% over 2 years for it to make sense to sell your home because of all the costs, especially if you have a rental house, because now you're losing rental income. You have to add that in. And then you're also losing the, if it's a rental, now you're paying taxes. You're paying capital gains taxes. So we did a whole video where we talked about the math on this. It's super crazy. So obviously the people who won were people who held their homes, right? Like we said, hey guys, don't freak out over this.
Look, people who won are people who understand that real estate is a long game and everything else is noise.
Okay, here's the chart. We'll start with finding the chart. Obviously, this is January through December. The very bottom line, that gray line, is 2020 to 2020. You can see that home prices do what they do every year. They start to go up and then they maybe fall in the fall. We had that weird summer where home prices went up because of the pandemic. And then you go back to the left of that blue line and that's prices picking back up. You can see how they increased in the spring. And then look, they actually did decline in the fall. They do every single year, they decline in the fall. And then they start going up again. And then that red line is 2022. That was the super hot market where, interest rates started to go up. So a bunch of people purchased at the last minute to lock in rates. And then you can see home prices fell more than normal. But we still didn't have year over year price declines because the red and the blue, the red was still above the blue year over year. And then you can see the orange, we still had year over year price increases the first 2 months of 2023. And then the spring, we had that orange line, which is 2023. We had year over year price declines, but they were still way above 2021. But once you can see that orange line being above the red is year over year now. We're above year over year. We're almost back to the peak, but you can see the trajectory of where home prices are going. Now, this is not all markets. This is aggregate for the U.S.
Right.
Right?
Right. So take a look at this chart, and we want to know, what does your crystal ball say about that orange line? Where is it going? Is it going up, down, sideways? Where is it going?
It is unlikely it will do what it did in 2022, which it'll just immediately tank because the market has already factored in the interest rates. It's already built into the market. People have been used to paying these rates. And even today, with almost, I think, 6.9% interest rates on average for a 30-year fixed, home prices are up year over year. And right now, this time last year, I think we were about 5.3%.
Right. So the market has changed, and you can see that this is different. This is different. So you can't use past experience necessarily to determine what's going to happen. So this is where you get to put your Karnak the Magnificent hat on and tell us what you think is going to happen. Please like the video, subscribe, hit the notification bell, share the video, leave us your comments, and we'll see you on the next video. Bye.
Bye.